Welcome back. The FHFA recently allows lenders to work with Fannie and Freddie to use the VantageScore credit model to determine their creditworthiness. This breaks the long-standing protocol of only using FICO scores. FICO shares plunged 9% on that news 10 days ago and are down 18% since then. Here are some key differences between the two models. Both companies create scores from Equifax, Experian, and TransUnion. VantageScore was created by those three bureaus and requires a customer to have at least one credit account that's been open for just a month. FICO, meanwhile, requires a 6-month window. Critics, including FICO's CEO, argue VantageScore's looser requirements could introduce more risk into the mortgage market. The CEO writing a letter to the Wall Street Journal Tuesday saying this decision drives, quote, unavoidable adverse selection risk for all holders because that will ultimately be passed to taxpayers. The race to the bottom is real, and lessons learned in 2008 ought not to be repeated. But VantageScore CEO Silvio Tavares replied today, quote, more data reduces risk for the mortgage system, and including things like rent reporting, which VantageScore does, helps more Americans access mortgages. Here to discuss is Silvio Tavares of VantageScore. Silvio, it's great to have you here. Welcome.
Thanks for having me on, Kelly.
So data, I mean, tell me more. What are all the myriad reasons why we should use your, I hate to describe it as a looser credit model, to give access to mortgages to more families, more Americans?
Well, of course, Kelly, the opposite is true. I know you were being engaging to ask me that question in that way, but the reality is we ask more data to calculate our score than our competitor. The reality is in 2008, there was only one credit score being used in the marketplace, and that is our competitor's score. We ask for more data because the world has changed, and it's time for a more inclusive, more modern credit score. That's why our credit score is used by over 3,700 banks, including 8 of the top 10 banks, and we grew 55% last year, delivering over 42 billion scores. We ask for more data, and that's the key point.
What would be some examples of that?
Well, you highlighted one of the major areas in your opening comments there, rental data. It's, I think, obvious to anyone. You don't have to be an AI expert to know that the best predictor of a consumer's ability to pay a mortgage is whether they pay their rent on time. The old model from FICO doesn't do that. It's very, very old school in its composition. The reality is when that score was developed, people paid their rent with checks. There was no online banking being used. People sent their bills in the mail. The iPhone wasn't even around. We're in a much different world now where there is data available that can be used to enhance the predictiveness of a score. We've harnessed that data, and it's time to bring that technology to modernize the mortgage credit scoring system. We're really excited about this decision by the FHFA.
A lot of this, when I read it, does seem to come down to this thing about rents and that being counted as part of your credit history. What if there's a situation, Silvio, in which FICO says, you know what, fine, we'll count rents too?
Well, I think the best entity and best person to answer that is the FICO CEO. What I can tell you is that VantageScore includes that data and uses much more modern analytics techniques. If you look at the head-to-head comparison of VantageScore versus our competitor's score, we capture 11% more delinquencies and defaults. Our score is actually substantially more predictive, which is why, of course, the FHFA made this decision. But then you add to that the element of competition. Competition is what makes markets great. Additional data is also a key part of competition. And the reality is the law was signed in 2018 by the president, had strong bipartisan support. They decided to bring competition to this marketplace, and we applaud the FHFA director for finally implementing the law.
Do you have an estimate of, so I guess market share wise, I would imagine FICO still has, huge share. You guys are newer, obviously they've been around for forever, but do you have a sense of if you started to gain share amid all of this, and I'd love to know if there's like price competitiveness stuff here as well, how many more people you think would be able to access a mortgage or buy a home today if these become a viable option for lenders?
That's the most important point. Bringing innovation and technology to the mortgage credit score market, that opens up home ownership to more credit-worthy consumers. To answer your question quickly, It's over $1 trillion in incremental mortgage volume that is potentially available through the implementation of VantageScore 4. That is because we score 33 million more Americans than our competitors. Of that group, approximately 13 million would have a VantageScore of 620 or above. And within that group, approximately 5 million would be eligible for a mortgage, which translates at 1.83 persons per household to about $1 trillion in incremental mortgage volume. That is a big, big number. And it's important at a time where, quite frankly, it's so difficult to purchase a home. So this is about including more people that are actually creditworthy into the ecosystem with modern technology.
Well, Silvio, we appreciate you coming on. Again, a lot of stuff happening fast and furious at the FHFA, so it's important to break it down for people, talk about what's at stake here, and then see what the implications will be. Silvio Tavares, CEO of VantageScore.
Thanks, Kelly.